Hey guys, welcome. In this video, I'm going to be talking about 4 stocks I'm watching this week based on current events. The past few weeks in the stock market have been very volatile and we're still uncertain. We're still uncertain about the Omicron virus. So, without further ado, let's head to the video. But wait. Before you head to the video, please, if this is your first time tuning in and you have not subscribed yet, please hit that subscribe button below. It means the absolute world to me. I appreciate you. You can go ahead and watch the video now. SPY. We traded between 458 and 472.91. It was really volatile. At some point, we're thinking, oh, all-time highs, and then it was like, oh, psych, nope. Back to demand zone here of 458 area to 460. But we're seeing a lot of news about lockdowns happening. So does the market drop even further, or does it like continue in this state of chop? We'll find out this week, but we need to reclaim 466 to see highs to actually continue further. Else you're just going to continue a chop in chop zone, or we break this demand area here and head down to test 454, 453 level again. If we hold, great. If we don't, it's more pain. We'll see what happens. Biden is speaking on Tuesday, so that's the main thing people are watching out for, and that might set the tone for the rest of the year, assuming nothing else comes up. So I'll move on to talk about my first stock on the list today, which is Zoom. I picked Zoom because it's a stay-home stock, right? COVID. Most people use Zoom. That's when Zoom started really this bullish run that it had last year. But right now, it looks like it's trying to get out of this downtrend, especially with this Omicron virus thing coming up again, and it's getting really intense. So I think Zoom might actually benefit from this again, especially if we go into lockdown. Businesses rely on Zoom to communicate. Students would rely on Zoom as well. Offices. Anyway, you know the drill. So for Zoom, I want to see it base over 200 for more. Let's say 202. 202 for more upside. That's the level I'm watching for Zoom. And then for puts, I won't touch Zoom unless it breaks below 195. Breaks below 195, then you want to short the stock or buy puts. So those are the levels I'm watching for Zoom. The second one on the list is Netflix. Regardless, my thesis for Netflix is that this stock looks like it might be ready to reverse soon. Why? Let's go look at the past. Anytime it sold off and touched this EMA right here, you see that it always bounced and stayed on an uptrend. So that's what I'm watching Zoom for. And Zoom, Netflix. Netflix is also a stay-at-home stock, right? People are gonna sit at home and watch Netflix. And regardless, it's the holiday season too. People want to watch holiday movies. So I think a lot of people will be logged onto Netflix this period. So just watch out for Netflix on the reversal here. To be on the safe side, you want 600 to you want Netflix above 600. Here. I don't trade Netflix. I barely do. But it's just something I decided to show you guys. I don't know if these lines are actually clear, so I might change it to white. I think white is better. Yeah. So Netflix over 600, yeah, can get to 614, even 630 if it's really, really uh bullish. Buyers are really coming in aggressively. We can see Netflix retest the 630 level sometime this week. However, if it breaks below 575, I think it would be a like yeah, more pain. People can yeah, shorts would definitely attack it below 575 for Netflix. So that's the level I'm watching for shorts or puts if you play options. And then it's above 600 for calls. The third one I'm going to talk about here is Chegg. Oh, Chegg. Chegg, oh boy. School days. Chegg got a lot of people through school. And if you don't accept that, you're not being honest. Anyway, Chegg has been beaten down since earnings. They just sold off aggressively. Before earnings, it was a $62 stock, and then it just had this rough rough numbers. I guess people did not believe that it was going anywhere. It was also a stay-at-home stock because students are learning from home. So the rationale was like a lot of people will be using Chegg to assist them with school. So it looks like it's finally bottoming out and it's ready to start grinding back up. One thing I like about this Chegg setup is that I think it's high probability too, is this nice bullish engulfing candle pattern that we see here. So, and once you have bullish engulfing at support after a downtrend, there's a high chance that the stock would move higher, right? I think this is basic TA. So for Chegg, I want it over 30. I want 30 for Chegg. So above $30 is definitely a go. Let that change. Anyway, yeah. Above $30, Chegg is ready to go. Like I'll say first test would be $33.64 area. This area. Not bad. What is my hand today? Yeah. I'll say it tests this first. This area first. So about $34 should be first Chegg's first real test. If it breaks above 30, I think it's gonna go ahead and retest 34. However, you can just decide to short Chegg if it breaks this 27 level right here. $27 right here. Below 27, feel free to short, and it can go back down to retest this 24.28 low, form a double bottom. And the last one on my list here is Peloton. I know people might not like this, but hear me out. Peloton, yes, is a COVID stock, but that they're actually trying to shift away from the home stock narrative by putting their equipment in schools, school gyms, businesses, hotels to try and diversify. So, regardless though, if we keep hearing rumors about potential lockdowns, these stay home stocks are going to move. And if, oh, we don't eventually get going on a lockdown, you can still have opportunities to short the stock or buy puts. So in my opinion, it's a win-win scenario. So as you can see here, Peloton is trying to break this downtrend here. What's going on? So Peloton is trying to break this downtrend, and the major resistance it has right now is 43. So above 43, you can see Peloton heading up to test this resistance levels I have on my chart. However, if it fails, we can see an opportunity to short Peloton right here below, I think below 39 is a 39.20 is a good starting point. If you want to be safe, you can do 38.50. 38.50 is an opportunity to short. Then you know for sure it's going to continue heading down. So 38.50 is a safer entry point. But also, I think 39.20 is also a good point to short Peloton. So yeah, that's it. 4 stocks. I have Zoom, Netflix, Chegg, and Peloton on my list this week. Opportunities to go long or short the stocks. Let me know where you're watching. Well, that's it. Thank you for tuning in. I appreciate you. Stay safe. Believe in yourself because I believe in you too. You're great. Have a great week. I'm out. Until next time.